Hello, 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 hello. Apologies. Hi, all, and welcome to another edition of YouTube live edition of TraderCast. Um, my name is Philip, and I'll be your presenter today. For those of you who don't know me, I'm a founder and uh, a CEO of TraderCast.com, which is our community. So if you're looking for a community where you can engage with us, talk to us, look at the daily analysis in depth, and look at the key trading levels. That's where you go. If you're brand new and a little bit confused with what I'm doing, and you don't really know why I am doing certain things, and you're looking for the education, you can check it out on my trading skills. I've been initially investing in stocks since mid to late 90s and started trading on margin, i.e. derivatives, more seriously at early 2000s, and I've been doing this properly since 2004, so quite a lot of time. And I'm also a trading education consultant and market analyst. Over the past 10 years or so, 15 years, I had the privilege of speaking in front of a number of industry events and also talking in front of thousands of different people who are probably in a similar situation as you. And I had the privilege of teaching some of them how to trade as well. Some of them were brand new and they really needed kind of step-by-step guidance where to start or how to start trading. And some of them were actually experienced traders who needed help with specific area of their trading, maybe risk management, maybe psychology, maybe entries and exits and that kind of stuff. Now, big disclaimer, because obviously we are this is public now, so this is pushed as a kind of a public YouTube example of what almost like a consolidated version of what we are doing in the community. These are my opinions and experiences. This is not advice. I do not have the indication of your personal investment and trading objectives. I don't know what you know. I don't know how experienced you are. I have no idea. Have you traded before or not? So what I'm doing here are my opinions and experiences only for the educational purposes, almost like a proof of concept of what we are teaching you in the courses and also what we are showing you in the community. So that's what it is, like a little example. Current positions, I am a long Nasdaq at 15,648. Long WTI crude at 64.40, so those two positions stayed open from a few days ago. There was some partial profit taking on crude, which is fine. I was long gold at 1775. My stop was initially below. I moved it at break even and then slightly higher, and recently I got stopped out at 1778. So basically stop was above the entry, so I got stopped out with that. I was also short euro dollar at one spot 1366. Yet again the same situation. I was maybe too greedy. I was looking for 112.20, 112 to the downside, and I should have followed my normal rule: take partial profits as you go along, and some of the levels were hit 112.40, but I didn't do anything. I wanted more, maybe because I had the other positions which were quite profitable, so I felt I'm gonna go for 112, and instead what happened is market reversed and picked my stop, which luckily I moved below the entry over the past several. So if you watch some of these previous broadcasts, you'll see what I've done. And also I've just stated here that I'm long silver at 22, and I was really toying with the idea to place the trade right now. I'm not in this trade at the moment, but I was looking to buy silver at 22, and I'll tell you why. So I have it on because I am definitely considering doing that probably during this session as well. I'll explain the reasons why as well. The first things first, let's go and show you some charts. So since I was mentioning silver, this is that setup in silver that I was waiting for. My entry was supposed to be here at 22. I was looking for a reversal, some sort of bullish reversal, and this last 15-minute candle looked like it could possibly break. It didn't. If that happens, my stop would be down here about 20 points below 2180. My take profit would be up here towards 2240. So 20 points of risk for 40 points of gain, 2-to-1 risk to reward ratio. That's roughly what it is. The reason why I would be looking to initiate this trade is based in this higher time frame, and you can see this wick here from around 8th or 9th of August. I can be precise and tell you exactly what it is. Yes, 8th of August. 8th of August of last year. So just bear with me a second. Okay. Just want to check if this is all okay. Yeah, brilliant. That's the reason why I wanted to kind of, I was looking for a bounce off these lows. These lows, they were tested over and over and over again, and the logic is if the price goes to that level where it bounced off in the past, it's likely that it might do the same as well. So that trade is not triggered just yet, but I would like to see a breakout above and a move higher. What I'm expecting is push, breakout, possibly a retest for a potential oversold bounce back in this area here, because that would be a retest of the falling resistance trend line and also nice little fib retracement to 61.85. So multiple areas of evidence pointing to the reasons why I would like to take the profit at 22.30, 22.40, around there. The entry is at 22, stop 21.80. It didn't trigger, but that's what I'm looking for. Okay, that's what I'm looking for. Yet again, if I'm confusing some of you with what I'm doing here, apologies. That's not my intention. I'm literally just showing you hopefully what you will be able to do yourselves as well, if you choose to go with one of our courses. Okay, the other thing that I'm looking at actively is gold, and although I did get stopped out with gold, I think this setup is still valid. So 1775, that level keeps repeating for me. 1775 was looking at this buying pressure, buying pressure, buying pressure. I would be probably looking to see if the price settles, and then I would likely try another long there as well. Where would I take profit? 1790. Breakout above 1790, 1800 comes in play, and then 1808, 1810. My initial trade was triggered at 1775, and then I had a stop below, stop at break even, stop higher, and then when all of this happened, I was still holding this trade. Because I thought this is a corrective pullback. And I was looking for a bounce higher. Instead, over the past hour, over the past 3 or 4 hours, this is what happened. We saw a flush lower and a dip, so I got picked up with 1778. So that's where I am with gold at the moment. Actively looking at it, 1775 again for the possible entry. The other thing that I currently have open is Nasdaq, and I wanted to show you my thoughts on Nasdaq. This was the Nasdaq. This was yesterday's setup. I was looking for a pullback to 16,200. I'm currently long. I'm long Nasdaq from the clusters of these lows, and I'm seeing this as a breakout. I'm seeing this as a breakout. So the logic is, if we see a pullback to that breakout area, then it's likely that we would see a bounce off that as well. And the price did come close to it, not exactly to 16,200. It was 16,250, so it was a 50 point short of the entry for additional position, but it didn't trigger. From the continuation point of view, I'm also looking at this. This is very bullish in my book. Energy build up, energy build up, energy build up, and these patterns have the tendency to break to the upside and push higher. So break above these highs, 16,450, could likely open the way for a gradual move higher towards 16,700, which is the current all-time high. Currently in this position, in the money, definitely energy build up, price is coiling. Now, I don't want to confuse anybody, but the reason why we are seeing all of this is because there is a really big and important announcement coming tomorrow in relation to a US inflation, and depending how that numbers, how the data comes out, it could trigger severe volatility across US dollar currency crosses and also US equities, because the reaction would be assessed on how the Federal Reserve might react. So anyway, I'm probably explaining too much, but that's the logic behind it. So this is my Nasdaq trade still open. So let me just show you where I am. So I initially entered here, this double bottom. My stop was below, closer, at break even, above entry, and now yesterday I moved it here. So currently my stop is at 15,920. So what I'll do is I'll move my stop higher towards 16,050, or yeah, 16,050, locking in 400 points on this trade. And remember, I would like to add at 16,200, or I would like to add at the breakout of these clusters of the highs at 16,400. So either way, that's where I am, and the ultimate limit is up here at the current all-time high towards 16,700. So a nice 1,000 points higher. So I'm in the money, happy with this trade, really happy with this trade. You don't need too many of these. You need maybe 3 or 4 of these per annum, and they really help with your overall P&L. The other thing that I currently have, where's my silver? Silver is still, sorry guys, I'm still waiting on the silver to do something above 22. And nothing with silver at the moment. Gold is looking a little bit better. Gold is tickling my attention here, but yeah, this is all fine, I think. The other thing that I have currently open is crude, WTI crude, or US traded crude oil. I'm long, and yet again, this probably looks too busy for some of you, but there is a logic there. I was looking for another entry at 69, so pullback to 69. I would be looking to add to this position for possibly a bounce higher. So that's the logic behind it. That's the logic behind it. The stop would be very low. Sorry, very low, very close to that entry. So 68.40, 68 to the downside. So 60 to 100 points of risk. And then I was looking for extension towards 72, 60, 74, possibly 76 on the upside, and that this is where the take profit is. So from the risk to reward ratio point of view, this really makes a lot of sense. So it could be almost 6 to 1 or 8 to 1, depending when I enter or how I enter and so on. But currently I'm long. I'm currently long. I'm also seeing this as a sideways consolidation, and these type of sideways consolidations, they have a tendency to break to the upside. So there is your flush lower, massive flush crash, multiple bottom here, neckline, low, 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 higher low, breakout higher. So that's the logic behind a crude, and I am currently long crude from 64.40. Now, for those of you who, yeah, silver keeps nibbling lower, gold is still thinking about it. For those of you who followed that trade, you know that I had a larger position and I took 2 partial profits, and I'm repeating this for the benefit of people who are watching this for the first time. So the initial entry was down here at 64.40, so that was the entry, and the reason for the entry was combination of these 2 candles here at the level. Fairly straightforward if you understand the price action, and then the price went higher, and then what happened is I was looking at low, higher low, higher low, so I took partial profits at 67.70. So when the price dipped below this imaginary trend line now, but there was a trend line at that point, so I took 1/3 of my position at that point, and then as the price kept on falling, I closed another lot at 66.40, 66.50 if I remember correctly, and then left the last third of the position open. At that time my stop was above entry, and I'm moving stop higher, moving stop higher, moving stop higher. So my entry is here, my stop is now above the entry, locking in 257 points on this trade. I cashed in twice already. I took money out of the market twice already, and I'm waiting for more upside towards a breakout above 73 towards 76. The level of interest for me is at 69. So this is the level of interest for me as well, for crude oil. And that's what I have currently open. From the other points of interest, S&P was setting up for a nice setup, which nearly triggered yesterday. So
economic research from Moody's saying they expect continued robust US consumer spending and solid real GDP growth next year.
So for those of you who understand trends, this is quite self-explanatory. Corrective pullback, 4-hourly breakout. I was long S&P as well. I closed S&P. So now I'm looking to add again, and what I was looking at yesterday is a corrective pullback to 46.60 for a rally higher. So that's what I was hoping for, and this is what I would be looking to trade around 46.60, 4660. My stop would be at 4640, 20 points of risk. My take profits would be at 47.17, 47.25, 47.37, 47.40, call it 47.40. So we have 80 points of potential gain for a definite amount of risk to the downside of about 20 points. So that's the logic behind it. And it didn't really come to that level. It came close to it, but it didn't come to it. So at the moment, I'm reassessing this in the same way as I talked about Nasdaq. This is a very much textbook scenario. Coiling, energy build up. Bulls are in charge because we have higher lows. This type of patterns, they have the tendency to break to the upside. We are in December, the most profitable and bullish trading month. So Santa Claus rally just before Christmas and holidays. That's the logic behind it. But market is awaiting a crucial piece of information which will come in tomorrow in the shape of US CPI, Consumer Price Index data for November, and that will give us the indication of the level of inflation in US, and therefore a likely reaction of Federal Reserve and further monetary policy tightening, tapering, and a speed of rate hikes which were planned for the future. And when we have rate hikes, that normally triggers volatility across currencies, US dollar in this case, but also equities and commodities as well. So I'm talking too much. Yet again, I'm defaulting to my a normal presentation style here, probably explaining too much. So for those of you who came in to see the trades, hopefully I've satisfied your interest and explained the reasons why I've opened them. They're all based on a very simple strategies that you can easily repeat, easily replicate yourself. They're based on a set of repeatable parameters that occur in the market over and over and over and over again. Hopefully it was informative and you found it beneficial. In the meantime, come and join us in the community at TraderCast.com. I've just realized there's few TraderCasts on YouTube. Not all of them are the same, but if you're looking for a community, come in and join us in TraderCast.com. It was lovely talking to you all. Stay safe, happy trading, and bye for now. Thank you for watching. Thank you.